we have Britanny Melville here from Next Generation Services, who's going to talk about IRAs. So let you go ahead and just introduce yourself. 2 minutes, everybody.
Okay. Thank you, Max. Thanks for having me. I appreciate it. Hello, everyone. Britanny Melville with Next Generation. We are also in New Jersey here on the East Coast. Not sure where everyone's calling in from, but I've been with the company for about 3.5 years. I have some background in a couple of different industries. Consumer goods, healthcare, finance, and then went into this kind of financial side of things. So we do network and work with a lot of real estate investment groups and real estate investors. So this type of education is something that I think's great for anyone in real estate to have. So I'm excited to share that with everybody. And I hope you'll have lots of questions for me. So yeah, looking forward to it.
No, I have some questions. I've been putting this off for longer than I should be. I think we just spoke about that a little bit also, because it's any time that you have the ability to save money and you can actually take that money and reinvest it, which I think you're going to get into a lot tonight. Like that's just a way of, again, using other people's money. Right now we're using the tax money to invest, and that's just going to increase your ROIs. So I'm very excited to hear everything about this. I'll let you guys take it away. Go ahead. And guys, like I said, any questions, feel free to use the question and answer box, use the chat box. Just make sure that you switch it up to either everyone or to the panelists, depending on who you're directing it to.
All right. Do you want me to get started, Max?
Yeah. Looks
Just
like
about
we have
7. Okay.
people logged in.
We're good?
We're good to go.
Okay, awesome. All right, so, and Max, feel free to let me know if I'm not noticing questions popping up, or if there's something you want me to address, just feel free to interrupt me.
Absolutely.
All right, so everybody that's here tonight is interested in real estate, one form of another or another. And what we're going to talk about tonight is utilizing real estate investing as part of a financial overall wealth building strategy for potentially yourself. So we're going to talk about how real estate can mix with retirement accounts, retirement planning and retirement savings. Not always the sexiest topic, not the most exciting sometimes for people, but when we think about what kind of financial futures we want to have, how long do we want to be working? What kind of legacy do we want to leave behind for our children or our loved ones? This is something that is really important to be thinking about, even at a young age. So just want to expand kind of the knowledge that you might already have and give you some things to think about, and we'll get started. So as it relates to self-directed IRAs, which we're talking about tonight, we as a company are actually a custodian and administrator for these accounts. So what that means is we're a financial services company, and we are structured to be able to open and hold IRAs. Sort of like if you have an IRA already with like Fidelity or Schwab, for example, they are your custodian, which means that they custody, they hold and safeguard your account. So that's what we do, but specific to self-directed IRAs. So that's our basically our specialty. And that's our role in making sure that the accounts are handled appropriately. Just a quick disclaimer, one thing that is different with self-directed IRAs is the custodian is not your financial advisor. So self-directed IRAs, I'm going to talk about in a minute, they allow you more freedom to choose your own investments. And with that means that the company that's holding it for you is not telling you what you should invest in or endorsing or selling you specific products. So one of the beauties of this is that you kind of have so many different options you can choose from, but it's just important to remember that relationship with the custodian is not that of a fiduciary relationship. So just a quick background on the company. We were founded in 1994, so we've been in business for over 15 years. And we're a women-owned business in northern New Jersey. Our founder and CEO, she's still with us. She actually, I love her story. She's also a real estate investor, and she was a real estate investor before she founded the company. And she actually founded the company because she had all these properties, and she thought that it would be a good idea to put a property or have a property in her IRA because of the tax benefits, and she didn't know how to do that. So in her quest to discover how that was possible, she decided to found her own company. So that is how we came to be. And she is still she actually owns a property management company as well. And she's a real estate broker. So she's got a lot of experience in real estate space. And we also, of course, are involved in, a lot of the kind of financial publications as well. And we do tons of webinars like this, like we're doing tonight. And we've been on multiple podcasts, lots of exposure to the real estate world. So for those of you who have either never heard of self-directed IRAs, or maybe you've heard kind of just rumblings about them, but you're not really exactly sure what they are. Basically, the easiest way to define it is it's an IRA, which is a retirement account that allows you to invest in non-traditional assets. So when we say that, we mean things that aren't traded in the stock market. We've seen the market go crazy, especially in the last year. Max and I were just talking about how drastically it dropped and then how drastically it rebounded in 2020. So it's great to see that it's doing well, but we know how volatile it can be. And when we think about our hard-earned dollars, being subject to that volatility, sometimes it can make people lose sleep at night, make people a little uncomfortable, especially if you're, closer to retirement age and you're going to need that money. So what this type of IRA allows you to do is invest in things that are not subject to that same volatility. They're what we call alternative assets. So they're not publicly traded, they're privately owned. And they're usually things that people are investing in already with their own funds, like real estate, for example. We have tons of real estate investors out there that use either their LLCs or their personal funds to do these types of deals. But by putting them and using the IRA, the retirement account, as a vehicle for the investment, you are sheltering your earnings from a tax perspective. And we'll talk much more about that. But that is one of the biggest distinguishing factors that makes a self-directed IRA very unique. So in terms of how it works like an IRA, it basically the same rules apply that would with other types of IRAs and that sort of thing. But the difference is the allowable investments and then the tax benefits that you're getting. And of course, it's when you think about doing this, it's kind of like thinking about diversifying your portfolio, but doing it beyond what you might have in the stock market. So even thinking more than, bonds and equity, beyond that type of diversification, holding some of your funds in alternatives. One of the reasons too that people like to diversify into alternative assets is they are not correlated with publicly traded, which means that if the markets are going up or down, or whatever's going on, if they're spiking, if they're volatile, the alternative assets tend to not move in that same direction with the market. And alternatives tend to yield more stable returns over a longer period of time. So people like the idea of that as well, of course, and having some of your funds at least allocated to a position like that, can be a little bit more of a protection play over time. So why this is especially important now, and I think in speaking with some financial advisors too, we're seeing interest growing in this space, is the retirement landscape is changing, right? It's not, back in the day, in baby boomers especially, a lot of them would work for a company for 30 plus years. And if they were loyal to that company, they'd get a nice, healthy pension. They'd retire and they'd be set for life. and, they wouldn't have to worry about the gap between where they wanted to be and what they had saved up. But now we're seeing that that's not the case, and many Americans have nowhere near what they need to have saved for retirement. So what that's forcing is people to work well past retirement age because they just can't afford to retire. As well, Social Security used to be a resource that people could rely on for retirement as a sole source of income, and now that's thinned to the point where it's barely enough to even rely on. So it's creating this need for us to look elsewhere to try to figure out where to fill that gap. And I think investing in alternatives and self-directed IRAs and just in general taking more ownership of these accounts is really important. So let's talk about self-directed IRAs, which people are interested in for tonight. So the types of accounts that you can open and invest in real estate, for example, among other things, which I'll talk to you about, are, and for people who aren't as familiar with IRAs, there are different types of IRAs and they're treated differently from a tax perspective. So traditional IRA is the most common. Your funds go in pre-tax, means that you can typically deduct those contributions on your taxes. So you're not paying tax on them up front. So they go into your traditional IRA, you invest those dollars, and then when you generate earnings on your investments, those earnings are tax deferred, meaning that as long as those earnings are going back and staying in your IRA, you're not paying tax on them until well into the future when you decide that you'd like to start pulling money out. At that point, they would be subject to ordinary income tax. A Roth IRA is sort of the flip side of that, where your funds would go in after tax. So you're not able to deduct those funds when they go in, but the beauty of that, because technically you've already paid taxes on that money, is that anything that you earn from your investments is tax-free. So that means that potentially you would never have to pay any taxes on what you're earning in a Roth IRA. And when you take those withdrawals, as long as they're, of course, qualified withdrawals, you're not going to be taxed on anything that you take out. So that is a pretty powerful tool.
Quick question. So is that tax free or is that tax deferred?
The Roth is tax free.
Wow.
Now, the money that goes into the Roth is, when we say after tax, we mean that it's already it's taxable money that you're using upfront to put into it to fund the Roth IRA. But let's say you put in $10,000, right? And that was after tax dollars. And you invest that over years and years, and you turn it into, 50,000. That 40,000 that you earned never gets taxed ever. So that's the beauty of it. The SEP IRA, simple IRA, and then employer and qualified plans, these are for business owners or self-employed individuals. So where this applies to real estate investors potentially is if you're an agent, if you have your own LLC, your own real estate company, then you would qualify potentially to open one of these plans for a business owner. And one of the differences in the plans for business owners is that they allow you to make contributions based on how much you're earning in your business. And when I say making contributions, I'm referring to how much money can you, let's say you open one tomorrow with $0 in it, you need to put money into it so you can start investing. How much money can you put in? A SEP IRA, for example, is going to say, okay, if you're a business owner, you can take up to 25% of your compensation every year and put it into your IRA. And that's tax deferred as well. So, and that maxes out at $57,000 a year. So potentially there's a lot of opportunity for you to take money that you're earning, stashing it away into IRA, deducting it from your taxes, which is another benefit, and then investing it into products that are going to give you tax deferred earnings. So those are things that are important to understand if you own a business as well. If you own a business, you don't have to open one of those plans. Anybody can open a traditional or a Roth IRA, but it's nice to know that you have the different options. And then the other two account types are for children's education. And those withdrawals are tax-free if they're used for education-related expenses. And then HSAs, which I think everyone's familiar with, those can also be self-directed. So those can be used rather than just like parking money in there and using it, at face value for medical expenses. You can actively invest it when it's sitting in there and grow those expenses. And grow those funds. So we just talked about account type. So once you open a self-directed IRA, you need to get funds into it, right? I had just mentioned a moment ago that one of the ways you can do that is by making a contribution. So that means that you can take your personal funds out of your checking or your savings. You can deposit them into your IRA. The IRS, which regulates all of these things, will only allow you to put in so much every year. And it's going to be based on your age and based on the account type that you have. So all that information, I won't get into that right now, but it's just important to understand that you have those options to make a contribution, but it's going to be limited every year by the IRS. The most common ways, somebody raised a hand, I say. Does someone have a question?
Just put it down. If you have a question that you want to ask, we're going to open up for question and answer towards the end. If you have something current about what Brittany's talking about, just put in the question and answer box, and I'll make sure to bring it up to her in the middle of the conversation.
Okay, sounds good. The most common ways that people fund their self-directed IRAs are transfers and rollovers. So oftentimes somebody will come to us and say, hey, I have an IRA with Fidelity. I have, $100,000 in it. I don't want all of it in the market. I want to do something with 30,000 or 50,000 of it in real estate. So what you can do is take a portion of the money that you have in that other IRA, which isn't, if you have it with Fidelity, for example, they don't hold alternative assets. So they don't deal with real estate investments in IRAs, which is why you have to use a self-directed custodian. So what you can do is you can have funds transferred from that Fidelity account, for example, into the self-directed IRA. And that would come over in the form of cash, and then the cash in the IRA would be used to make your investments. Another, especially now, very common situation is rollovers, where we see people that maybe they lost their jobs in 2020, or they left corporate America and they had 401ks that they were participating in, that now, since they're no longer working for those companies, are just sitting kind of dormant. So a lot of people seem to forget when they leave companies that they have these 401ks sitting there, and they're not now being actively managed once you leave the company. So it's a great opportunity to take those funds and do what they call rolling over from that 401k into an IRA. And those can be rolled into a self-directed IRA, and then you can more actively invest them and decide what you'd like to do with that money. And then the last thing is a conversion, which is basically it's moving funds from a tax deferred account into the Roth. So we talked about the Roth being tax free. So if you move funds from a tax deferred, like a traditional or a SEP, and you put them into a Roth, you can do that so that you can grow tax free from there. But when you do that, that is going to create a taxable event. So for example, if you had 10,000 in a traditional and you wanted to put it into a Roth, that 10,000 is going to be taxable during the year that you move it into the Roth. And then you can invest that 10,000 into whatever you like. There's no limit to the potential that you can grow it to at that point, tax-free. So these are the different ways you can get money into an account to get started. So the fun part we're finally getting to is, what can you actually invest in with a self-directed IRA? So real estate is by far the most popular asset class in this space. Maybe it's because most people know real estate. Maybe it's because people understand the benefits of investing in real estate and passively, which works really, really well in IRAs. But even within the realm of real estate, there's also the mortgage notes. We've seen people use IRAs to purchase like non-performing notes and then basically collect on them in their IRAs. Tax liens. When we say private placements here, we mean sort of like private equity investments. So it could be investing in somebody else's real estate company, if it's an LLC, if it's a limited partnership, if it's a syndication. IRAs can do all of those things. So you can get kind of creative. within certain rules, of course, but partnering IRAs with other investors and buyers is an option. Outside of that real estate space, actually, before I move on from the real estate space, lending as well. There are lots of people that use their IRAs to act sort of as like private lenders. So the IRA will lend funds to either an individual or a company. That company can then use those funds to maybe invest in real estate, maybe they need it for personal use or something, and then the borrower pays back the IRA with principal and interest and in accordance with whatever terms are agreed on. Private stock as well, like investing in startup companies is something that self-directed IRAs can do. Precious metals was kind of hot last year. Whenever things get crazy in the world, people like to buy gold and silver.
Well, I'm sure that actually probably picked up this year.
Yeah, it definitely did. And the
just
brokers love to take advantage of like any uncertainty in the world.
and I'm just looking at the list now, like I didn't even know that all this was possible. I mean, I just see a lot of different opportunities here that a lot of people are getting involved in now, between mortgage notes. That's been a really big boom lately. Cryptocurrency. I'm not a firm into it myself kind of person, but obviously there's no question about it. It's happening, right? So
Yeah.
do you need a separate account to kind of work between the different possibilities, or does each one have its, you could pretty much do whatever you want with like any of these things on the list?
Yeah, that's a good question. So you could have one self-directed IRA invest in multiple assets and different types of assets and hold them all within the same account, or they can be separated if that's what somebody prefers. But it's similar to an IRA that you might have, where you might have like a basket of mutual funds, stocks, bonds, that sort of thing, and they're all held within the same. So they don't have to be separated out. It would just be each asset would have its own value, of course, when you look at the total value of that portfolio. So social and impact investing also is like it's really up and coming, I think, investing in social causes. And that's something that IRAs can do as well. The IRS basically, they tell you a lot more about what you can't do, and you'll see more of that to come here, but they tell you more about what you can't do than what you can. So you kind of have to work backwards in these thought processes here. But they basically just say you can't invest in life insurance, which I think kind of makes sense with an IRA, and you can't purchase collectibles like antiques, like if you had a wine collection or like antique art, that sort of thing, that they don't allow. But anything else that's not.
No, I was just going to say, I think they definitely got the right audience. All the entrepreneurs involved in real estate, they like to know what we can't do first, and then they kind of make their rules based around that, right?
Yeah. Yeah, they have the same mindset. So I'm going to talk now for people that are interested in real estate. This is like the meat of it here. About the way I see it is there are 3 different strategies that you can consider if you are interested in self-directed IRAs. So this one is really different and interesting, and I think most people don't think of this first. And Max, you kind of alluded to it before when you mentioned like using other people's money, right? Because a lot of people are out there and they're looking for capital, they're looking for funding, and a lot of people don't think to consider the enormous amount of money that's out there sitting in retirement accounts. I think it's like $20 trillion in the overall retirement account market. And there are a lot of people out there with money in their retirement accounts that are looking for new and different things to do. They might be looking to lend money to people, or they might be looking to invest with others. So looking at, or for people that are looking to borrow or looking for partners or looking for investors, consider people with self-directed IRAs as well, or maybe ask the question of those individuals, do you have an IRA that you would be willing to use? Maybe they don't have the personal cash, but they have cash in their retirement account. And that starts the conversation, and it's a huge untapped, I think, channel for people to think about. So here, I've just basically summarized, some of the different things that you can do as far as, promissory notes if you're looking to borrow from IRAs, or you're looking to have IRAs invest into your company, into your deals, that sort of thing. Obviously, it's a benefit to that person as well with the IRA, because all the returns on investment are going to flow back into their IRA and help grow the value of their account. And then, of course, you get the funding that you need. So everybody's happy. The second strategy is if you were looking to open your own account, and I talked about this a little bit earlier, is you can be on the lending side, where you use your own account to, lend to an individual or an entity. Those notes, basically, as long as the terms are reasonable, interest rates are within, fair market rates, basically the terms can be decided on between those parties. So that's what's nice about the self-directed IRAs. You have the freedom. Like, your custodian isn't telling you the interest rate has to be X or Y. The custodian is looking to make sure the interest rate isn't crazy low or crazy high, so that it's fair, but you get to negotiate those terms for your deal. And then, of course, those notes can be secured or unsecured. If they are secured by property, other collateral, and then most of the time in this case, the IRA is then going to collect principal and interest. Sometimes these are convertible notes where you can convert to, equity, whatever agreement strikes between those two parties. And then the last way, which we sort of talked about a little bit too, is using your own IRA to either hold property directly where your IRA owns that property, or you can do it through an LLC, but essentially it's the same concept where your IRA is going to be on title, or the LLC is going to be on title to the property. And those investments can be residential or commercial. They can be fix and flips. They can be buy and holds. There's a lot that you can do. It just gets a little bit, more complex when you talk about trying to leverage property through the IRA. In that case, if the IRA needs to borrow to make a purchase, the loan needs to be a non-recourse loan, which basically means that if the IRA takes the loan in association with the property and the IRA defaults on the loan, then the lender can only foreclose on the property. The lender can't go after other assets in the IRA. The lender can't go after the IRA owner's personal assets. There's no personal guarantee involved when IRAs are investing. And I'll get into those regulations in a moment here, but that's something that's important to understand. This is high level for tonight, so that's something that can be kind of delved into further. But as far as the earnings are concerned, if you're doing a fix and flip, of course, when the IRA sells that property, then any profits that you make are going to go back into the IRA. And then if you're going to buy and hold that property as a rental, the beauty of that is it's passive income for your IRA, and likely at a much higher rate than you're going to be getting in the stock market. So especially for people that are already investing in real estate, you're just thinking about how you can apply what you're doing already or what you're really passionate about to your own, financial planning. And then, of course, when we talk about partnering, this is very common because a lot of times we will speak with people who have IRAs and they'll say, I want to invest in a property, but I don't have, $300,000 or $500,000 to buy it in cash, and I don't want to do the non-recourse loan. I have, $50,000. What can I do? So this is where you can get a little bit more creative as well, of course, within rules, but you can partner your IRA as, essentially co-owner on a deal that the IRA could either partner with other IRAs, the IRA could partner with an LLC that's going to purchase a portion of the property as well. You can actually partner yourself with your IRA. So if you had some of your own cash and you had some in your IRA, you could essentially partner the two into a deal. You would have to make sure that your IRA's ownership allocation stays with your IRA and that that's consistent, because your IRA's portion is going to be tax sheltered and your personal portion is going to be taxable. So that those allocations do need to be very clear, but that's something that custodian will work with you to make sure is documented properly, and every transaction is is within those rules. But this is usually very common because a lot of people, especially getting started, they just don't have enough in their accounts. So thinking about all those things, there's a lot to think about, and people come up with a lot of really creative ideas. We've seen people do a lot of really cool things with their IRAs. But just to note that, as a reminder, anything that's earned on these investments is going to go directly back into the IRA, and that's how the tax advantage stays consistent, right? Because if we use the IRA to purchase property and then earnings leave that investment and go back to the person directly, then that becomes taxable. And the idea of doing this is more of a passive investing, a little bit longer term we're looking at here. So it's not going to be necessarily anything the IRA is investing in isn't going to give you quick cash. If you're partnering with yourself, then of course your portion is going to be your quick cash, and your IRA's portion is going to be for that longer term outlook. But that's just something to keep in mind. So
here's one with discipline issues. This will make sure that you keep your funds where you need it to be as well.
Oh yeah, the IRS doesn't mess around. And you don't want to mess with them. And on that note, here are some of the regulations that the IRS has put out when it comes to IRAs. So they have defined certain, like what they call improper prohibited transactions that IRAs are not allowed to do. So while this is a great strategy, you do need to be careful and be educated and be aware that it's not as free as just using your personal funds, right? Just as you wish, because these are tax advantage accounts that follow certain rules. So the prohibited transactions basically outline some of the different types of dealings that are not permitted within the IRA. So the first one is an IRA engaging in a transaction with what they call a disqualified person. So I'm actually going to hop ahead real quick and tell you what disqualified persons are. So that would include yourself personally, and then any spouse, ascendants, descendants, and their spouses. So if you think about like a family tree and you go up and down in that like lineal fashion, those individuals are considered disqualified persons. Now, earlier I said you can partner. So yes, you can partner with any of these people. But if you're going to directly transact with them, meaning like you want to buy something from them or you want to sell something to them, that's what the IRS doesn't allow you to do. So for example, like someone says, oh, I want to, sell the property that I own to my IRA. The IRS won't let you do that. If you're going to purchase a property with your IRA, it has to be like a new property that you don't own and that a disqualified person doesn't own. So same thing with lending.
IRA?
What's that?
Are you allowed to refinance your property into an IRA? Well, I don't know if that would even make sense.
Yeah, that wouldn't really work either, because the transaction would still involve, right? The transaction would still involve you personally, and then you'd have to change the title. Yeah, so that still wouldn't, the IRS wouldn't allow that.
Gotcha. Okay.
Yeah. So same thing works with lending, right? So you wouldn't be able to like borrow money out of your own IRA or lend it to any of those disqualified persons. So that's why usually looking at this as like an investment vehicle is the best way to look at it when you talk about like real estate investing and lending to investors that are not related to you, for example. And then the other one the self-dealing is a little bit of gray area with the IRS in a way, but basically what they're looking at is anything that might sort of be like a conflict of interest, because some people try to use their IRAs to just as a tool to just benefit themselves now, right? And that's not what the IRA was designed to do. So sometimes the investor might try to use their IRA to invest in, a company where they're getting paid personally for doing services or something like that. And if the IRA's investment is impacting their personal compensation, the IRS says, okay, well, you're kind of like double benefiting from this, so we don't really like that. So these are the things that a self-directed IRA custodian is responsible for spotting. So of course, if we were having a conversation with somebody interested in, creating an IRA for themselves to do these things, and they present us with a scenario, we're going to be able to tell them whether or not they can do it based on the regulations or if it's prohibited. And of course, before processing any transaction, we review everything to see whether it's compliant with these guidelines. So that is important to understand. So I talked about prohibited transactions conceptually, but as it relates to real estate, these are some examples of things that would be prohibited, right? So I mentioned already that the investment has to be for investment purposes only, not necessarily for like personal use or benefit. If the IRA purchases the property, it's responsible for all of the maintenance and expenses associated with its investment, as it is, of course, entitled to all of the profits from and earnings as well. But you wouldn't be permitted to like purchase a property with your IRA and then use your personal funds to cover the expenses. So that's something to keep in mind, of course. And sweat equity as well is a big one to keep in mind. That's not permitted with a self-directed IRA. So if you buy a property, you are not able to work on it yourself. So you would either use contractors or you'd have a property management company that would be doing those types of repairs and work on it. And then if you're renting it out, or whoever you're letting use or live in the property, cannot be any of those disqualified people that was in that list, right? Same thing comes into play when you go to buy or sell or lend or exchange property. If you're going to buy somebody out, can't be a disqualified person, that sort of thing. And then the biggest thing that we come across is a lot of times people come to us a little too late in the process and say, hey, I put down a deposit on this property and now I want to put it into my IRA. If you put down a deposit personally, it's a little too late, because essentially you secured ability to get that property with your personal money, and then the IRA is trying to come in later. So what we usually say is, if this is something that you think you want to do, try to think proactively about establishing your IRA. And then when you come across a deal, from the outset, everything should be in the name of that IRA, and the IRA should be all the funds from the IRA are responsible for getting that deal done. So and we're almost finished, so I'm happy to start taking questions. One of the things that we get a lot of questions about too is, how does this work logistically? Like, if I wanted to do this, how do I get started and how long is it going to take? So these estimates are all very conservative, but essentially the first step would be to open an account, right? And similar to any IRA, you have to fill out an application with all your personal information. It's all very secure. You have to provide your ID. We offer it through DocuSign, but it has to be DocuSign through your email address that's provided. Nobody else can sign it, type thing. And then we do like a full ID check on everybody's application. The account can be open within 1 to 2 business days. And then once that happens, then we begin the funding process, which is one of those methods that we talked about, either a contribution, a transfer, a rollover. So our team works with each investor to basically guide them through the process of making sure that we get the funds from the other institution, or if they're making a contribution, we give them the instructions for doing that so we can do it in a timely manner. Now, I've seen this happen as quickly as a couple days and then sometimes several weeks. And the only reason that we sometimes say that is just because when funds are coming from another institution, we have limited control over how quickly they will release them. But typically, optimally, if the investor has a good relationship with their institution, or the investor is involved in that process, or the account holder, I should say, then it's more likely to be a smooth and quicker process. As long as all the requirements are met on both sides, it really should only take several days, maybe a week, I would think, to get an account funded. And then making the investment itself is going to require us doing a review of supporting documents. So if a property is going to be purchased, for example, we want to see the purchase agreement. We would put down the deposit. We would work with the title company to make sure that title is going to be in the name of the IRA. Then, of course, the investor can conduct all their due diligence, inspection, that sort of thing. But we would need to see all the documentation associated with it, because as the custodian, we hold title to all the investments that the IRAs are making, which is the proof that they own them. So it's important that we see that, and that we, of course, do that compliance review as well that we talked about, to make sure that they're following the proper guidelines. If it's a partnership, for example, if there's a partnership agreement, we would review the partnership agreement so we understand all the partners involved in the deal, the IRA's portion of ownership, what it's entitled to, what are the terms of that agreement, etc. If it's a loan, then we would see a copy of the promissory note, for example, so we understand what are the terms of that loan. Is the IRA being paid back timely? So those are the things that we would review, and that's usually a 2 to 5 business day review period where we do that in depth for every single investment. And then once that's completed, we would actually sign all of the documents where the investor would normally sign. We would sign on behalf of the IRA as their custodian, which enables this to happen. And then we would process the transaction by sending the funds out from the IRA to the entity that they're looking to send it to. And we would only do that with the direction of the account holder. So the term self-directed, referring to the idea that you're directing your custodian to move your funds, and you're basically telling us how much you want us to take out, where you want us to send it, when you want us to send it, how you want us to send it. So because we're not advisors, we don't make those decisions for you. You have the freedom to tell us how you want it to be done, and we basically follow those instructions and make sure that it's done properly, that we do all the record keeping. We also do the tax reporting for these accounts. So our job is to make sure that we protect the tax advantage status of the account. So that is our primary motivation. And of course, in providing education like this tonight too, we're also setting up investors to be successful in using the accounts properly. So in closing, really the idea behind this is to, if you're an investor, kind of open up your boundaries and think about tapping into your either existing network or maybe a new network that you want to form, and having these conversations and understanding how much money is out there that you can tap into. And then, of course, collaborating with everybody throughout the process. But hopefully this has helped get people thinking about a new way to approach either real estate investing or retirement planning, and both, really. So at this point, I thank everybody for listening for this long, and I know that we have some questions, so I'm happy to take those as well.
Thank you, Brittany. That was super informative. I very much appreciate that. I know I learned a lot tonight. We definitely do have a lot of questions, and I just want to kind of say before we bring those in, guys, now that everyone's doing their, well, you should have been doing this in December and November, which is your 2021 goals and planning. This would be a great time if you are looking to get involved in properties. As Brittany said, you want to be ahead of the curve, not behind the curve. We don't like working from behind. So if you are interested, definitely do get in touch, ask your questions now. This is a great time where you can get all the information you need. So the first question we got was actually from Anthony, who's asking, how can I shelter most of my rental income from taxes, LLC or S Corp. So I'm not sure, Anthony, if you want to just elaborate a little bit more, if you want to raise your hand, by the way, guys, anyone who wants to speak out loud and ask their question so we could maybe understand a little bit better, feel free to. So just raise your hand. We'll call on you. We'll let you speak and ask your question. Anthony, if you could just elaborate a little bit more on what you mean there. So Vicky is saying, I believe you mentioned Fidelity does not offer a self-directed IRA. Her current brokerage is Charles Schwab, and she wants to know if they do self-directed or if she needs to move to a new brokerage.
Good question. Yeah. So any of your main, the big brokerage houses like Schwab and Fidelity, E-Trade, Vanguard, trying to think of some of the other ones. All of them are not going to offer, I mean, you can ask for sure. It can't hurt to ask, but their business models do not include alternative investments typically. So more often than not, they're only going to allow you to invest in publicly traded options. So if you wanted to do something like real estate, you would just have to have that portion in a different self-directed IRA with a different company. And you can keep your publicly traded, your securities with Schwab, for example, but you'd have to move the rest to another company that specializes in self-directed.
So Pauline just asked like what? I'm not sure which part she was referring to though. Pauline, if you want to just raise your hand maybe or elaborate a little bit more. Robert's question is, can you depreciate the rental income property on your income taxes like you can without being held in your IRA?
Yeah, that's a good question. Yes, you don't have that. That's one of the trade-offs. You don't have that option in an IRA because it's a tax advantage account. So it wouldn't apply in that situation.
Okay.
So you'd have to weigh it against the tax savings.
Gotcha. Okay. So hopefully you're making enough profits on there where the depreciation is not a big deal. So Anthony is elaborating. He says, how do I protect my rental income from excessive taxes? Is an LLC or S Corp the best option when minimizing my tax footprint?
So it's not necessarily a matter of whether you're using an LLC, like in this case for tonight's conversation. It's not necessarily a matter of whether you're using an LLC or an S Corp or what sort of structure you're using, because at the end of the day, if you're using a self-directed IRA, the IRA is going to shelter your investments from those taxes. So, for example, let's say that you purchased property directly in the name of your self-directed IRA and you rented it out. Your rental income is going to be either tax deferred or tax free if you have a Roth, as long as it's held in that IRA. Now, let's say that you use your self-directed IRA and then you invested it into an LLC, and then that LLC went and purchased property. The same tax advantages are going to apply because it's the IRA that is technically holding the funds. So whether you have it in an LLC or not, you're still getting that same tax treatment. I think maybe the question, if we weren't talking about the money being held in an IRA, then it would be a completely different answer as to how those entities are going to be treated from a tax perspective. And that would be a really good question for a tax advisor as to like how to structure or how to hold those investments outside of an IRA. But in an IRA, it's always going to give you the same tax benefit.
Awesome. So now we got Brian who wants to speak. Brian, I'm going to allow you to speak right now. I think you just have to unmute yourself.
Right. Hi, Brittany. This is Brian, and this has been very informative. Thank you very much. I have actually, you did answer my first question, like what were the tax advantage to Robert? Because there's no depreciation one can take out if you buy an IRA to a rental property. But are there any other tax advantages besides at the end of your term, taking out whatever the rental income at the age of 59 and a half? I think that's one. Second is, banks normally are not very happy to give you a loan, or they do not want to give you a loan if you have a self-directed IRA, because it's a non-recourse loan. So are there any financial institutions that you know that do support this and give you a loan?
Brian, pleasure to meet you.
Yeah, same here.
I was making a joke. We actually specialize in that. So we are investment lenders. So we only lend to people who are investing in real estate, not for their primaries. So being that we work with investors mostly, we actually know a lot about IRAs and how people like to utilize them in their business planning. So feel free to reach out to me. We have a lot of programs that we can lend you if you are using your IRA, if you're doing it personally, LLC, doesn't matter. We have a lot of different options for that, but I'll let Brittany go ahead with that first question.
No, that's great. Yeah, if you're looking for a private lender to offer non-recourse, any lender that's willing to do it. If you're looking for a bigger bank, there are a few banks nationwide that we know of. We have them on our website as resources, and that's something that I could share separately if needed. But they definitely do work with, and those banks we know offer non-recourse, and they work with IRAs. They're typically going to, from our experience, they're typically going to require more money down, different debt to equity ratio, and the interest rates may be a bit higher. And they typically always want a cash flowing property. So each of them may have different requirements and different terms, but those are something to think about. If you wanted to go that route, there are probably just a little bit more criteria that you'd have to fit in order to get that type of loan.
Brian, did that answer your question?
Yes, that did answer the question. Thank you very much.
You're very welcome. Any
welcome.
other follow-ups?
Yeah, and I will be in touch with Martin. I just spoke to him this morning. Okay.
Awesome. Well, hey guys, look, anyone else that has any other questions, please do post it. I think we got another one that just came in from Pauline. If I can't use personal funds to make a repair and maintenance by using the IRA to buy investment property, then where should the money I can use for repair and maintenance? I'm assuming from the IRA.
Yes, that's correct. Yeah, so you'd want to ideally budget what you think you're going to need to hold in the IRA in like cash reserves, basically, to cover those types of things that might come up. One option, of course, if you're low on funds and you need to do a repair, well, there are a couple of different things you can do. One is if you need more cash in the IRA, you can make a contribution like we talked about before. If you haven't hit your limit that year for personal contribution, you can contribute cash to infuse additional cash into the IRA to cover that expense. Another thing that you can do is you could even have a non-disqualified person maybe cover that expense, and then you could pay them back for it. So there are a couple different ways that you can handle that situation, and we definitely have clients that do that all the time. So it's a really good question, and obviously the ideal situation would be having enough cash and reserves. If you're renting out the property, usually that's not really an issue because you plan that out, and you're gonna have regular cash flow coming in every month, so that's going to be budgeted to cover those things. But good question.
Absolutely. And also, most of the time, also, if you are coupling your IRA up with a loan, your lender is going to want to see the debt service coverage ratio to ensure that, your rental income will cover anything that could potentially come up, small fixes and things like that. And I'm assuming that's going to go into the IRA where you'd be able to make those kind of pull out funds from there to make maintenance payments. Am I saying that right?
Right. Yeah. And the custodian would actually make those payments for you on behalf of the IRA. So basically you would authorize those payments for us to make, but we pay them things that are like monthly recurring type payments can just be set up with us to auto pay them out of the IRA. So it's not a lot of headache, to handle those every month when they come in.
Guys, if you guys have any other questions, please do put it in now before we go. And I just want to thank you everyone so much for such a, first off, thank you, Brittany, for a very informative webinar. I was very happy to have this as our first webinar of the year. 2021 is just starting off. I hope it's a strong year for everybody. Definitely seeing a lot of pickup in the market. A lot of people are starting to get a lot more. There's a lot more movement in there, especially, we've seen the conventional market picking up. We're seeing a lot more deal flow now as well for the investors. We got another question from Pauline. Awesome. So you mentioned Fidelity and Vanguard won't offer self-directed IRAs. What are the major institutions that do offer self-directed IRA?
So we're one of them in New Jersey. So I don't know where you're located, but we're obviously we can service investors in any state. Okay, Illinois, sure, that's fine too. Investors in any state or even country as long as they qualify for IRAs. So you could probably do a search if you'd like to see what other major ones there are. But there aren't as many, I would say, as like the large institutions, but there are a handful of companies that offer self-directed IRAs nationwide. So you won't have a problem finding one, I'm sure.
Well, definitely give Brittany a call. And then if anyone, if anyone also wants a copy of this webinar, we are going to send out a thank you email for joining us. That'll have a link where you could find it on our website, on YouTube, Facebook, and many other places, wherever you're located. Feel free to reach out. We're going to send out the information, take down Brittany's number here. I also did put it in the chat box for anyone who needs, and I'll keep that open for another minute as we finish up. And I appreciate everybody's time, and thank you so much for joining us tonight.
Thank you for having me. Thanks, everybody. Stay safe.
Awesome. Have a good one.